How often do you see thumbnails like earn $1 billion from $1? We all know that's just clickbait, but unfortunately that's just how YouTube works these days. And it's no surprise people love these kinds of videos. Actually, the most common question I get is, how much can I make with $300? So I pulled $300 out of my pocket and deposited it into a brand new account to see how much I can grow or lose. All right, we've got a solid payout percentage and a strong uptrend. Just what we need for the first trade. To make things easier, I'll mark the trend and switch to the 1-minute time frame. The price pulled back to the trend line, moved into consolidation, and is now heading toward the support area. I'll enter this trade in the direction of the overall trend. There's no sign of a reversal, so we'll stick with the global price movement. A 10-minute expiration should allow enough time, even if the price breaks out of consolidation and tests the trend line again. All right, while our first trade is running, let me share my master plan. We've all seen those videos where people turn a small amount into a big one by going all in with tiny deposits. It's fun to watch, sure, but it's purely entertainment. For every success story where someone flips $50 into $2,000 with 5 all-in trades, there are probably 200 cases where they lose everything. With that being said, my channel is for people who are interested in consistent profits, not random lucky wins. But let's be real. Growing a small account in a safe way would take forever, and it's not the most exciting thing to watch. So I had to come up with a strategy to grow small deposits that's high risk, rewards you for taking those risks, and still gives you some room for mistakes. Because with all-in trading, there's no room for mistakes. And here's what I came up with. For money management, we're using the anti-martingale system, capped at 3 trades. In short, this is a system where you double your trade amount after a win, and if you lose, you go back to the starting amount. It's the opposite of the classic martingale system. I explained it in more detail in this video right here. For the first trade, we'll start with 5% of the account balance. With this setup, assuming a win rate of around 65% or higher and an average payout of 85%, you can aim to grow your account by about 7% for every set of 3 trades. Here are the full calculations I worked out using ChatGPT. And meanwhile, the first trade brings us our first profit. The price bounced off the support level and moved in the direction of the global trend. According to our strategy, the next trade amount will be $36. All right, let's take a look at this chart. Payout rate here is solid, 88%, which is great. We also have a strong trend in play, which is always a good sign, but there's one thing holding me back. Take a look at this beautifully formed head and shoulders pattern. This is a classic trend reversal pattern, and I'm not willing to go against the global price movement. So instead of forcing this trade, let's move on and check out some other charts for better opportunities. Take a look here. Just like in our first trade, the price is moving steadily along the uptrend, following the classic impulse consolidation pattern. Right now, the price is sitting at the support level within this consolidation. Most likely, volatility will decrease, allowing the price to make another upward move along the impulse. A 10-minute trade should be plenty of time since the price doesn't have far to go to reach the trend line. I'm analyzing this on a 1-minute time frame, so let's go long for 10 minutes. I honestly thought this trade might end up a loss, but the expiration time I set was just enough for the volatility to shift. A sharp price jump in the direction of the trend secured my second successful trade in this triplet. All right, let's keep going. A currency pair with an 80% payout. We've got a global uptrend that was broken by a sharp downward impulse, and now there's a local uptrend forming. Just what we're looking for. These conditions are perfect for using the back to trend strategy. Let me quickly remind you how this strategy works and when to use it. As the price moves along the global trend, it needs to break the trend line and enter a consolidation phase. From there, we wait for the consolidation to break in the direction of the global trend and then enter a trade following that trend. The expiration time should roughly match the distance from the point where the trend line was broken to the start of the consolidation. In this case, instead of a consolidation, we've got a triangle pattern, which is a continuation signal for the trend. Basically, this means the local uptrend should keep going upward. The entry point is when the price breaks through the resistance level of the triangle in the direction of the global trend. And it happens with strong volatility. After the breakout, the price is likely to move about the same distance as the height of the first impulse in the triangle. For this setup, that first impulse is made up of 5 candles. But just to be safe, in case the price pulls back to the resistance level, I'm adding 1 extra candle as a buffer. So after the resistance level broke, I entered a 6-minute long trade and closed my first successful triplet on this small deposit account. All right, let's wrap up the first day on this account. I managed to close 3 successful trades in a row, taking us from $300 to $411. That's a solid 37% increase. As expected, it was both exciting and risky. Of course, I don't trade this aggressively on my main account, so it was a nice change of pace to take bigger risks on a secondary account. I'm really curious to see how far I can take this in the next videos of this series. Thanks for watching, and I'll catch you in the next one.